Welcome to Impact Unicorns, the podcast where you meet inspirational entrepreneurs building the next generation of transformative companies. And now, here is your host, Dr. Indranil Ghosh, award-winning author, investor, and advisor to global leaders.
Welcome to Impact Unicorns. And today I'm delighted to welcome Maria Filmanovic to the show. Maria has been an impact and ESG investor for almost a decade and has a great track record at top institutions like Goldman Sachs Asset Management, and has been involved in all forms of ESG investing in real assets, private equity, infrastructure, as well as carbon removal. Recently, she started her new company, Abatable, which is a Y-Combinator backed company focusing on carbon offsetting procurement. So Maria, it's a great pleasure and delight to have you on the show.
Thank you so much, Indranil, for welcoming me on the show.
Maria, you've had a great career in this blooming space of impact investing. And now you've started your latest platform, which is Abatable. Tell us a little bit about your own journey, switching from investor at a top institution like Goldman and going into the uncertain and perhaps nerve-wracking world of entrepreneurship. What's that been like?
Well, it certainly has been, I think, something I've always considered to be an entrepreneur in my life. Maybe this started as I looked at my father, who was an entrepreneur. I really thought, having that autonomy of trying to bring an idea to life, I found that really passionate and sort of inspiring as a journey. The journey into impact investing really started when I was in university. I wanted to actually be a policy person and soon realized that the public administration wasn't for me. Sort of incentive alignment wasn't really there, and bureaucracy really scared me. And what I thought was interesting was the community around impact investing. What a lot of people back then were starting to think about is that you could combine a lot of the environmental and social elements of the society and how to measure those kind of outcomes in the context of finance. And I thought that was really, really interesting. This was back in 2012-13 when I was studying at Oxford, and Oxford was really leaning into a lot of these concepts back then. This even before ESG became mainstream. So that was really something I had on the back of my mind. Impact invest is a good, interesting, policy alternative for my career. How I ended up in Goldman Sachs is actually a slightly different story, in the sense that I wanted to join some impact investing funds, but a lot of them were telling me, you're too junior, no roles out of university. Why don't you start your career in finance, and then let's chat in 3 years or so. So that's what I've done. I take their advice, joined Goldman Sachs in London, and with the idea that I would leave and start something in the impact investing community or join a fund. And I think what happened is Goldman acquired an impact investing business at a time that I was about to leave, and I really raised my hand, and I was lucky enough to join a very entrepreneurial setting. I moved to San Francisco. It was really breathing in Silicon Valley in a way, because I was an investor in the tech ecosystem with an impact lens. So really, really interesting experience, and very entrepreneurial, contrary to what people think, joining a bank looks like. Because I joined a team of 10 people that were acquired, that were new to the whole infrastructure, and really felt like, there was a benefit in putting a process in place, but you could see a lot of the creativity early days into the team that I joined. And so when I set to do this journey myself, I wasn't scared at all. I saw that team scaling. I was involved in a lot of the hiring processes. And so suddenly, it was less scary for me. And I felt like it was a good time to leave end of last year and join a friend of mine to start Abatable.
That's a wonderful story. And interestingly, around the time you were developing a passion for impact investing at university around 2012, I remember being at Abatable as their head of strategy and trying to form this sort of nation-building, impact-oriented investment program for Abu Dhabi so that they could diversify into the new economy and the knowledge-based economy. And the interesting thing was, when we had people from Goldman come by, they'd be very interested in what we were doing, but they really didn't understand what double bottom line investing, which has come along to be called sustainable or impact investing these days. They didn't understand what it was. So it's actually a tribute that within a very large and prestigious bank like Goldman, that there is this still this ability to onboard new ideas and new trends and build an entrepreneurial team within an ecosystem. And I think in the case of impact investing, it was the acquisition of Imprint, if I'm not mistaken. So you probably joined just after that acquisition. And tell us a little bit more about what it was like in the early days, because there must have been a lot of lack of awareness, but also it must have been exciting because it's the Wild West, a brand new field. What was it like to sort of build a business in that atmosphere?
Yeah, you're right. In 2015, Goldman Sachs Asset Management acquired Imprint Capital, and that's the team that I joined in San Francisco. I was the first Goldman employee they hired. So I moved from London to San Francisco to join what was at a time a group of person that came from different walks of life, predominantly sort of former energy investment bankers, people from the nonprofit space. So a very diverse group of people that I never thought, could coexist in the ecosystem of Goldman Sachs. But I think credit to, a lot of the visionary senior people within Goldman that really thought that ESG was going to be the next big thing. This was even before others realized. And making the investment in acquiring a platform that worked with, at the time, very large foundations in the US, family offices around thematic investing. Really, a lot of what we're doing was investing in new emerging themes linked to the low carbon transition or social inclusive growth agenda. So I think a lot of the credit to the senior partnerships in Goldman, because that was a leap of faith and very smart investment they've done. The platform then grew in the sense that this team grew itself, but also there were a lot of hires that were made that had significant exchange with our team on knowledge sharing, on ways they could use our knowledge, our understanding of different themes into other products and services that Goldman Sachs ended up using. And so now a lot of the focus within such a big bank has been in trying to offer that as a holistic solution for any sort of client that approaches Goldman Sachs as an outlet, because they realize that everyone really needs an element of ESG, whether it's in green bond financing or whether it's your M&A acquisition strategy and trying to build, acquire new renewable expertise, for example, if you're an energy group. So that has been an amazing journey to observe from within and outside. I continue to really be a fan of the team and what Goldman is doing around sustainable finance.
And you continue to surf the leading wave, if you like, of impact investing by now starting Abatable, which is looking at carbon markets and offsetting, carbon offsetting procurement. But before we get into the details of that, can you give us a landscape of the carbon markets overall and which particular segment your work fits into?
Yeah, so carbon markets really take different shapes and forms. I think the distinction that people might be aware is the first one, which is the difference between a compliance carbon market and a voluntary carbon market. Compliance carbon markets tend to be markets where entities are regulated to be trading carbon allowances. So, for example, people might be aware with the European Union ETS. The other scheme that falls within sort of regulatory carbon markets is, for example, a system of a carbon tax. There are some countries that impose a carbon tax as well. Within voluntary carbon markets, that's really where Abatable sits in, and that's a recent interesting development the market has seen, A lot of corporates increasingly are pledging to get to net zero by 2030, 2040, or 2050. And that's what I call the pledge economy. So they're not mandated to be doing that, but they're really publishing, stating to the outside world that they commit themselves voluntarily to get to net zero. The voluntary market really entails corporates for what is the hard-to-abate emissions within that supply chain to be buying offsets. And there's a market for carbon offsets that has been around since the Kyoto Protocol and continues to be enlarging. And roughly 500 million tons of CO2 equivalent credits have been transacted last year, which was a record high since the beginning of this market started. Within the voluntary carbon markets, there's been a lot of interesting movements. In particular, we've seen very large corporates like Microsoft, Apple's, and others really commit to net zero and being large purchases in the market. And I've run, RFP processes that are pretty comprehensive in trying to have a call for project that come from really different types. And we've seen a maturation and of some types of project that reduce or remove carbon, but also a very interesting new project within the carbon removal technology space that have great potential, especially if they're supported at scale through the use of carbon offsets. And carbon offsets often are just, simplistically, the way I describe it is it's effectively a monetary compensation for pricing an external emission that is happening, whether it's removed or avoided. And so that can help really a lot of companies get started, especially new companies that need R&D capital and might not have a commercial viable product just yet, but need that extra capital to cover some of the initial R&D cost, high development cost of their supply chain. So it's a really interesting instrument and one that I think a lot of corporates are looking at as a way to support innovation in this space.
This is fascinating. Let's try to put this in context. So you said that the last year, the number of offsets traded was 500 million tons worth of CO2. So in the context of how much CO2 we're emitting at the moment per year, that's about 1%, if I'm not mistaken. Is that right?
Yeah, so we're emitting at a global level roughly 40 gigatons. So, multiples scale, lower currently of where we are in this market. What you need to take into account is roughly 25% of global emissions are actually sit within the compliance market. So the number I was mentioning is for the voluntary carbon market. So very small level. Clearly, a lot of research is estimating a scale up of the voluntary carbon market of a factor of 10 to 30 times by 2050. So that's a significant scale up expected. And we've seen the task force for scaling voluntary carbon markets really create a bit of the principle and the guidance for how corporates need to think about this sort of instrument to be able to increase adoption and move way more corporates to start doing this now as opposed to waiting for 2030, 2050. So, it's a significant scale up, certainly very small compared to where we need to be. And I think that's probably where the challenge is making sure and corralling a lot of interest is appropriately going into the space now as opposed to, deferring action, which might be too late.
If you're enjoying Impact Unicorns, don't forget to like, subscribe, and hit the bell to receive notifications of new shows. Bring the most relevant impact venture stories to the podcast. If you would like to review the show, go to the Apple Podcasts mobile app or iTunes to leave a rating and review.
So for the amount of CO2 we're currently producing, about 25% of it is legislated and to be abated in some way. So that's the compliance market. And then by 2050, we could have, another 10 to 30%, let's say 20%, round numbers, addressed by this carbon offset market. So between these two markets, there's already quite a large amount of that CO2 being accounted for. And the way these markets grow, I'm sure the compliance market will grow, as will the offset, perhaps faster than we think. So it's actually a promising trend, although, as you say, a long way to go. Let's drill in a little bit now into the voluntary carbon market, because there's sort of an interesting phenomenon here. As I understand it, not all offsets are priced the same. So in fact, the range of pricing on these offsets can range 100-fold, as I understand it. Tell us a little bit about how that works.
Yeah, absolutely. Not all carbon offsets are created equal. And the reason is there's different types of offsets. The first distinction people make is often an offset that is tied to an avoided emissions versus a removed emission. And avoided emissions are, for example, projects such as renewable energy production, as opposed to a fossil fuel energy intensive alternatives. So that's an avoided emission that is often quantified and estimated. For example, in the removal bucket, people think of, for example, afforestation and reforestation activities, where you're creating carbon sequestration through the form of a biomass creation. And so clearly, all different projects have different development curves. For example, avoiding an emission has its own cost relative to perhaps creating a new forest, buying the land, and that becomes more expensive. The other distinction is just a perception of quality. For example, in the case of a renewable energy project, a lot of people think of the carbon offset role and the monetization of carbon offset as non-additional, because perhaps that renewable energy plant would have been constructed anyway, because renewable energy is really cost competitive. It doesn't need any sort of help from a monetization standpoint or incentive to be able to create that. As opposed to, for example, in the case of new carbon removal technologies that are very early in the infancy of development, they need capital from an R&D standpoint. And so carbon offsetting could be truly additional in the context of, incentivizing people to be producing more of those carbon removal offsets. So you're right, Indranil, the discrepancy of price is huge. We've seen very old carbon credits, renewable energy trade very low last year, close to the $2, $3, $5 a ton, as opposed to some of the carbon credits that perhaps Microsoft has bought as part of their more recent procurement, where they emphasize a lot of the high quality, high additionality piece, trade often north of $600 a ton. So a very, very huge discrepancy. I would say the market has, a lot of the volumes that I mentioned, 500 million tons, those have traded last year close to, I would say, probably in the sort of between $7 to $15 range. So that's where we see most of the activity currently. The price has increased around COP26 significantly in this market, from, I would say, for nature-based credits, more recent vintages from, I would say, $7 to now closer to 15. And I think what we've seen is the fact that the people holding some of these inventories really are trying to price in a lot of the demand that's coming, not only from corporates, but also from potentially governments now needing to use some of these offsets as part of their NDCs, nationally determined contributions. So certainly a lot of movement. Pricing will move significantly. A lot of industry participants we work with really expect the price to increase. Some that comfortably say it's going to go up north of 20. Some say potentially even $50 a ton in this market. So, one that we'll continue monitoring. Certainly a lot more demand than there is supply, leading to some of these pricing imbalances.
Just a word on these price ranges. So, even if you're looking at something like forestry, and there needs to be some sort of certification or assurance that a forest, once it's grown, will remain in place and continue to hold that carbon in that biological form for 50, 100, 200 years, compared with, let's say, direct air capture and then trapping the carbon dioxide in a mineral form in a rock, which is essentially considered permanent. How do you see the market evolving in terms of the different segments of from the supply side, different types of projects, going from the carbon abatement to the biological, to the medium-term storage, to the essentially permanent mineralized storage. Do you see sort of much dynamics in terms of how these relative segments will grow and how they'll be priced?
I think it's really difficult to predict. The way I typically explain this to people is every project has its own development cost, right? If you're developing a forest and you need to maintain that forest intact, in theory, forever, because you would need to guarantee a level of permanence of the sequestration in the biomass forever, you're often dealing with costs that require you to purchase the land, purchase a team that does the monitoring, the verification cost of these projects for often 30, 60 years plus. And so suddenly the cost is not trivial. And especially if you sell some of the carbon credits for future issuances upfront, i.e. you're getting cash from the sale of the future offsets now, you need to be really, really careful in estimating the right cost along the way. Because the risk is that your carbon cost won't allow you to cover all of the costs over the life of the verification period you need to stick to. So we've seen some missteps in this market, often not pricing enough on the carbon cost relative to the development cost. Now, different projects have their own different revenue streams as well. So in the case of a forestry, for example, you could potentially harvest the biomass, monetize that, and then replant. And you could do this whereby at an equilibrium, the forest is intact and you've permanently sequestered at least the equilibrium state of the forest. So that's an example. In the case of direct air capture, the monetization avenue is very difficult to predict at this point. And so a lot of what you see and reflected in the price is truly what is the development cost of effectively deploying something that is not at scale. And so, some of the companies we've seen, whether it's Climeworks or Storiga, they're doing a lot of R&D. And so all of what they're trying to monetize in the form of carbon offset is the cost of that development cost at scale, plus a lot of the lessons learned that they will need to budget from here to when they will become at scale. And it's certainly that it's hard to predict because technological iterations, I think, are hard to predict even from the company perspective, let alone from a market participant in this space.
I guess a lot of people would be worried about assurances in terms of whether these projects will actually be delivered. So how does that work? How do you police these projects to say, will the forest actually be planted and managed for the allotted amount of time? Will the development and research that's happening in direct air capture, will it actually succeed? And will it actually be used to sequester the carbon that was promised? How does the market sort of provide assurances and almost insurance, I suppose, that these things will happen?
Yeah, I think it's really hard to provide assurance, especially in the case of direct air capture. There's a lot of unknowns from a technological development perspective, especially if that requires injecting the CO2 in underground, because we've never done it at scale. So there's a lot of risk. I think the genesis of the corporate buyers wanting to back such project in the form of a purchase of carbon offset understand the risk, and they're happy to take it. And they know that without them intervening or purchasing these carbon offsets, I think no one would give these company even a chance from a capital financing perspective, because these companies are not financeable outside of perhaps some grants from the government, which we know are not really reliable from a sustainability consistency perspective. So I think a lot of these corporates, especially the pioneering one, whether it's Microsoft or Shopify, others, really leaning into supporting the industry, wanting the ecosystem to develop. And there could be some contractual mitigations that they require. For example, we've seen in the case of maybe developers that have larger portfolio of credits or different projects, perhaps they're requesting replacement credits. For example, if there's an under delivery on one plant versus the other, But the replacement credit concept is something we've seen on more mature project types. For example, within forestry, often who develops forestry projects, has different projects. And so in the case of delivering one project, they'll be able to step in. Some of the methodology that we look at, for example, within BERA and others, have also require the developers to put what I call the risk buffer. So there's sort of a discount in the numbers and the quantification of CO2 that you're selling into the market. And that is as a way to create a sort of a buffer in case of the delivery of some credits. So there could be some contractual mitigations, but as I said, often the risking really happens at the quality of the developer itself, in the form of them being able to step in with replacement credits, them and their ability to be conservative in the numbers that they show you and they deliver. And in case it's really difficult, for example, if you're backing really early stage project like direct air capture, then I think the corporate needs to understand those risks and needs to budget for it.
So if a corporate, for example, issues a number of offsets to a direct air capture company or a forestry company, and it goes to the world and says it's offset some amount of its carbon footprint today or historically as well, as some companies are doing. And then those developers, project developers, don't deliver. Does the company then have to go and rebuy those offsets and make up the difference if, for example, the contractual mitigations or other things don't work out in the initial projects?
Yeah, I think what you would want is to make sure that the corporate or the intermediary advising the corporate has done their diligence. So in the sense that they feel like the clauses and the quality of developer reduce that risk in the first place. When the first place, for example, when there's an incident and there's an under-delivery, second thing you do is you see whether the buffer that you've budgeted for that project, which is often in the range of 10-20% that is carved out over time, is sufficient to cover that under-delivery. If that is not possible, then often what you do is you have a discussion with the developer and see if they can step in and provide some replacement credits from some of their other portfolio projects. If that's not the case, then I think it will be really challenging to be able to claim that you've actually offsetted your emissions, because you would be in shortage of credits to be able to do that. This actually is something that we've seen is really changing in also the way corporates talk about these sort of offsetting projects. And one thing we've noticed is that often where this risk exists and you're voluntarily committing to offsetting, you're not mandated, suddenly the scrutiny is a little bit relaxed. And the way how corporates have been approaching this is, instead of talking about offsetting, some of them are talking about climate contributions they're making, where the scrutiny is not on making sure you're overall net zero from an accounting perspective and you can recalibrate all these numbers, but instead you can claim you've actually positively contributed into something, and even though there's been an under delivery, that's a risk you had budgeted, and that's typically done in the context of how you communicate about these efforts. So the change from carbon offsetting to climate contribution is something we've seen. This is also guidance that has been provided by this science-based target initiative. They're talking of beyond value chain climate contributions. And it's something that I think will also be more relevant in the context of a new Article 6 policy, where now potentially some governments would want to claim ownership of the carbon credits. And so suddenly you have a contrast between what the corporate is interested in claiming and what the government would need to claim. And there's been some legislation around Article 6 on sort of corresponding adjustment between government national inventories and what the government and what the corporate's projects have been financed. So yeah, interesting question you raised, Indranil. I think a lot of people will just learn a lot about it by doing different projects and seeing what the delivery risk will be over time, and where the risk of government intervention could be in claiming the same carbon offsets.
Over the past 20 years, I've worked with hundreds of entrepreneurs to build impact unicorns. In my experience, every company that has a transformative positive effect on the world does so by building strong partnerships with communities, investors, and governments to solve society's biggest challenges. If you'd like to learn more about how innovative entrepreneurs can help to build a more sustainable and inclusive future, read my award-winning book, Powering Prosperity, A Citizen's Guide to Shaping the 21st Century.
So it really does seem to boil down to the quality of the projects. And I guess this is where your model comes in terms of carbon offset procurement, because you're looking for the best projects to provide to the corporates that need to offset or make a climate contribution. But I know that you've been doing a lot of research in this area. Perhaps you could tell us a little bit about what the supply side looks like. Where are these projects coming from, and if you're a corporate, what can you tell us about the supply side, about where to get these projects from?
Yeah, absolutely. So on your first comment, quality is something that we've tried to really do a lot of work on, especially in trying to define it. So one part of our business is really helping corporates with their net zero commitments. And what we do is we source and vet high quality projects that we think best address their unique needs. It's a really complicated space, and we help clients sort through different options. Quality comes in the form of assessing the quality of the project developer. As we talk about it, we think the quality of the project developer helps you with the risk implementation a lot. So that's one element of what we do. And the second layer, we look at the project itself. So how where balance of evidence is with respect to the additionality of the project, the permanence the project is able to have over time, and then the risk of double counting, as we touched on right now, specifically around jurisdictional rights, land title rights, and sort of Article 6 government action. So that's what we do. The genesis behind Abatable is really one of a platform that we connect customers with developers and intermediaries who own and develop these carbon offsetting projects and need a buyer to secure funding to continue to scale their operations and impact. And the way we're doing this is we facilitate the arrangement of offtake agreements of carbon offsets. So multi-year purchase agreements between the developers and intermediaries. Through the process, we gather a lot of pricing and carbon modeling data, which is helpful in aggregate to derive a lot of data insights and benchmarking. And specifically, this is helpful for intermediaries and trading houses that are trading some of these credits and financing some of these credits, because we inform what the market risk and carbon delivery risk is of these projects. So that's one of the monetization avenue we're currently exploring, is really trying to monetize on the data insights and benchmarking that we can provide, we can gather from the platform. So that's the first piece of what we do. In terms of some of the observations as we've been in this market for some time, is really that the ecosystem from the developer perspective is pretty concentrated. There's a lot of market participants that have been around since the early days of this market. So around Kyoto Protocol, the Clean Development Mechanism, and new ones that have come in, let's say in the 2008, 2013 period. This was pre-market crash. And so some of them, unfortunately, are no longer around, but the ones that have been around and have a long tenure really started to own a lot of the project and the volumes transacted in this market. So we've published some research we've done recently on the state of the carbon developer ecosystem, looking at how ultimately roughly 40% of the volume of nature-based credits are concentrated into very, very few developers in this market. So that's really, as we think about the data gathering piece of what we do, it's important for us to start working with some of those large developers, start understanding some of those projects, and where risk and lesson learned have been. So that's really sort of our key focus for now is Abatable.
You mentioned this very high concentration of projects. So who are some of the big project developers out there? And are they geographically concentrated or concentrated in any particular type of project?
Yeah, so the market is really concentrated into very few global players. Some of the names we've seen in the market are Wildlife Works, who have been a very large forest conservation developer with a portfolio in Africa, Latin America, predominantly. And then the other ecosystem of large developers in this market has been few players in the US, such as Finite Carbon and Blue Source, which has really developed a lot of the projects that could qualify within the compliance cap and trade in California. So that's the second ecosystem. And then the rest of the ecosystem is really a lot of country-specific developers that maybe have one or two projects under their belt. And currently, because they see the market evolving really fast, they have an interest in scaling their operations beyond one or two countries if they're operated. And so suddenly we're seeing a lot of them approach the market for financing and leading a platform expansion of their business, whether it's regional expansion or global expansion. And some we've seen also venture out from the bread and butter of what they've done. A lot of them had been doing renewable energy, carbon credits that became out of fashion. And so some of those developers we've seen now turn into nature-based solutions. For example, projects which are now more in trend, especially as a lot of clients are requesting for removal credits as we speak. But clearly, one of the things we observe is that those developers don't necessarily have the capabilities of developing forests. Maybe they have a carbon expertise, but developing a forest versus a renewable energy plant is significantly different. You're now dealing with trees and survival rates of trees versus building industrial plants and securing solar and wind farm equipment. So it's very different, and certainly one that we continue to explore. The market is moving very fast. We've seen very strong partnership between developers and capital providers, specifically energy groups that are interested in financing some of these projects and backing these platform expansion over time. So interesting one. We've published research on this. We'll continue to update some of the mapping we've done with new data that we're gathering as we approach developers and get more information on pipelines they're developing, how they're looking to scale, what sort of price expectations could be out of some of the projects.
Well, I encourage everyone to read your research report recently on the supply side. It's very, very fascinating, and will be in the show notes of this podcast. Maria, tell us a little bit about what you see ahead of in the coming year at Abatable. What are some of the things you want to achieve and milestones you're shooting for?
Yeah, it's a great question. Clearly we're very ambitious entrepreneurs, myself and my co-founder, so I have a really long list of milestones we'd want to achieve. But I'd say the main one is one thing we'd want to prove to the market is that there is a demand for carbon offsets that is not just on a spot pricing. So sort of, procuring carbon credits you need now to retire. And corporates are now seeing the price increase as an interesting opportunity for them to step in, procuring carbon over time as part of offtake agreements, similar to what has happened in the renewable energy space early days. So that's really something we would want to pioneer as Abatable, is procurement through offtake agreements over multiple years. And we're doing a carbon procurement event in April, which will be a pilot for us, where we're trying to facilitate carbon buyers, carbon developers and intermediaries in agreeing on offtake structure of 1 and 3 years to start with. So that's really sort of a milestone for us, pioneering the offtake market in this. And then the last milestone that I think it's important, that it's something that I personally really want to push Abatable to do more of, is trying to leverage as much data as possible through this connection of developers and buyers. And that comes in two forms. The one is from the developer's perspective, getting more information from them on where they see volumes of carbon credits to come, which I think informs a lot of supply side considerations. And then from the buyer's perspective, getting a sense on the price they would be willing to pay for different project types. As we discussed before in Dronell, there's not a lot of transparency just yet on pricing. Different exchanges have been attempting to do that, but I think part of what we could do as part of our procurement events could be an opportunity for both the buyers and developers to go through price discovery. And so that's something we'd want to at least document and see if we could use as a data set to inform better decision making over time.
Well, a lot of innovation ahead, I can see, and I'm wish you the best in achieving these milestones. They sound as though they'll be incredibly important for the industry at large, not just Abatable. So thank you very much for joining us today, and really look forward to checking in on you in a few months and years and see how this exciting new space is developing. But for today, thank you so much, Maria.
Thank you, Juno. A pleasure.
If you've enjoyed this episode of Impact Unicorns, don't forget to rate and review this show by scrolling down and clicking Rate This Podcast. And join me next week as I talk to more inspirational entrepreneurs building the next generation of transformative companies.